All right. All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. It is 9 a.m. Eastern Standard Time, Monday, September 26th, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Hope everyone's has had a nice weekend. A lot of great football, a lot of great sports to watch this weekend. Let's get back to work. Dow Futures down about 88 points off the lows. I know, take a drink. Nasdaq Futures just went green about a minute ago. Now it's out flat, 11,372. 3697, we were just at 3,700 on S&P futures, down about 0.32%. Russell 1678. Crude oil is up 0.44%. Again, kind of stuck between 75 and 85. We're right now at 79 a barrel. 231 for gasoline futures. That's up slightly. We'll talk about the big story this overnight, which was the pound dollar. Let's go ahead and get to the dollar. I'll expand this chart here. The dollar right now is flat, was red. We did hit sub one. No, did we not? We did not get to sub 113. We tapped 113, but we went ahead and bounced right now as this is a new hourly candle, pretty much flat on the day. Let's go to 10-year yields. 10-year yields are pulling back from their highs. We hit as high as 3.785% on the 10-year maturity. We do have a gap to fill here at 3701, which would be 3.7%, another one at 3491, and another one here at 3143. Again, you know the saying, well, we know the drill regarding the gaps. Gaps are important to watch. About 85% of the time they fill. That's not exactly scientific. But again, gaps to fill, and another one here at 3. So again, rates are going to fall eventually. I mean, they're absolutely been on fire. I mean, you could see just the big bounce from where we were before. And again, just continuing to move higher. 4% looms large as, that kind of round number theory resistance, you want to say. But again, yields and a dollar mean everything to this market right now, as we are still in a tightening cycle. How about the volatility index above 30? We'll go to the daily chart here. Right around support, I guess you could call it, right around 35, 34 and a half, maybe. So 31 now. We did bounce off this support. If you guys remember, our support here was right around 22. On the daily chart, we did break out of the 28 zone as we are now testing the lows of June. The Dow broke yearly lows, which is the 52-week low, and this year-to-date low, excuse me. But the S&P has not. So let's go to take a look at the S&P really quick. S&P right now on the daily, your support there is 36.39. So again, keep an eye on that level. That's the level we're watching. Again, if you're short, that's your target. That's what you're looking for. In terms of going long, go on the hourly. Actually, you know what? Let me go and bring up here the RSI chart here. Okay, so we are now on the hourly, again, kind of consolidating. We just opened yesterday in terms of futures. Let's see some key levels to look at on the daily. Previous support was right around 37.43. So again, a recapturing of that would be nice for the bulls, get us back to this level range here. If not, we're pretty much stuck between 36.39 and here. The good news, if you're a bull, is that you're now into oversold territory on the daily. Again, I expect some kind of snapback rally. Granted, I've been saying we're going to rally or bounce somehow for the past couple of days. So eventually a broken clock does get it right? But at the end of the day, again, the edge now is really to the long side. Again, if you're just playing the oversold levels, I guess temporarily, I think the June lows will break anyways. Looks like around 3,500 seems to be that kind of target. That's the 200-week moving average. If we go ahead and bring up the weekly chart, you could see it right around 35.82. This is on a weekly chart, so you could see the 200 moving average. So right around 35.78, that breaks you down below the June lows. So again, I do believe that we'll get there. The question is, do we get some kind of little bit of a relief bounce of some kind? Again, I still have that pissed off notion in my mind. You have to have a short memory. But that break of 3,900 where I shorted here, I was expecting us to get to that range of around 3,800. And then we just bounced that way all the way to 41.59 back about a couple of weeks ago. So again, don't expect just the market to continue just one red mark down. We do have seasonality coming. Let's take a look at it. Again, we're right around here. So again, we should bottom out towards the beginning of October based on seasonality. Now, again, all this you could throw out the window, but again, at least gives you some kind of guideline. October in an election year, seasonality midterm, you can see that we do tend to bounce higher with a little bit of a pullback towards the end of October. Beginning of November will be the actual midterm elections, and then you could see that we continue higher just based on seasonality. Again, we could say that it's not gospel, but again, we'll watch it. Again, if we do bounce, we know why, and if we don't bounce, then we know why, how bad the market is. So again, back to the daily chart. Again, your target is 36.39. If you're planning to short, again, that's your target, which is the June lows. The June lows here on SPY would be 362. You're now at 366, or about a $4 move. Again, if you're planning to use it or to plan to use that kind of target. Again, look at SPY. Look at the oversold reading on the RSI, 28.91. Again, last time we were below 30 on SPY, we had a nice little relief bounce from 421 to around 456, but we still fell to new lows. So again, it's not like this is calling a bottom, but again, a temporary bottom, a little short-term rally. Seasonality lines up, RSI lines up, the oversold conditions line up. Again, we have a gap to fill to the upside here around 375. That would be a nice, decent target. Again, if you're planning to swing it, maybe you could buy a couple of weeks, if anything, or you could just hold pat until we get to those June lows. So let's go ahead and move this out of the way. And we'll go ahead and talk about the rest of the day. Gold futures down about 0.21% this morning. Silver down 0.53%. Again, all in the dollar. Even though gold is still that safe haven, the dollar is not allowing it to move further. Bitcoin, interesting enough, holding up 19,000. It's been holding up around that 18.3, that support on the log chart. 1.5% it's up on futures, 1308 for Ethereum, even with a firm dollar. Maybe that's telling us a little bit of a risk taking out there. Again, Bitcoin being the riskiest asset, being that proxy for the Nasdaq in a sense. Again, that's moving higher. That can give a little bit of solace to the bulls. Maybe the Nasdaq catches up to Bitcoin in comparison. We'll see. But take a look at the Nasdaq on the weekly chart. You can see 11,157. That's the 200-day. Let's see if we get there. I'll place an alert on futures. That'll probably be that level to buy, since that's a huge moving average to watch. Maybe get some quick calls, or maybe play futures long there. Just really depends on the actual volume this week. We are now at end of the week. We do have many Fed speeches, 17 in total. We got some durable goods coming. Let's take a look at the calendar and answer some questions. We have Fed Chair Powell speaking tomorrow. We got new home sales tomorrow. We had Collins Investors speaking today. We have trade balance, pending home sales on Wednesday. Powell speaks again. Powell will be speaking a pre-recorded video, community banking research. Tomorrow he'll be speaking about digital currencies at an event by the Bank of France in Paris. Thursday we'll have final GDP numbers of the last quarter. The reading expected is 0.6%. That would confirm that we are in a recession, 2 consecutive quarters of negative growth. And then we also have Bullard speaking on Thursday. Friday, we have consumer sentiment, Bowman Williams speaking as well, PMIs, Brainerd speaks, personal income, personal spending, and core PCE, which is an inflationary reading for the Fed. Woo, a lot to go. And then we have earnings on Nike on Thursday and Micron on Thursday. So not a boring week to say the least, but again, what to look for in the market. Again, the June lows is what I'm watching. Watch that gap to fill on SPY to the upside on the daily, which is right here at 370, 356. Maybe we flirt with that 362.17 level. We'll bounce here. I'll probably play calls there right at that level around 362.17. Keep the actual stop pretty tight. Again, just looking to fill that gap. Not calling a bottom here, not saying we're going to go ahead and go to 44 or 80 or anything. Again, just pure technicals is all you could do. The good news is that there is no downward gaps, at least on SPY, S&P Futures, QQQ, and so on and so forth. So those have been filled. That's a good sign. Let's see what we get moving forward. All gaps are now to the upside. And again, with this RSI, we'll see. But again, I'm always bullish, right? I'm always long the market. Carlos is always long the market. Carlos is always bullish. Yeah, I mean, long term, absolutely. Bet on America. America always gets through it. Again, you have business cycles. That's just the way it is. In terms of buying stocks, again, Google has not hit my alert. AMD has not hit my alert. But again, maybe see if I can scoop up some TQQ and add to my position long term. Let's see it. Again, I have 1823 as my target to buy some TQQ for the long side. Again, we'll see if we get there. Let's answer some. Oh, one more part is the British pound, pound US dollar. How about yesterday? Gap down. Again, they had some talk about currency intervention. That was from Sky News regarding the Bank of England. As we know, they're talking about tax cuts and they're still raising interest rates. Interesting. So it did make a big bounce from the low of 95 cents. It hit parity, below parity. We bounced above. Now we're at 108. That's a big move for the British pound. That thing was down about 440 pips overnight as I was watching the Broncos San Francisco 49ers snooze fest. Let's answer some questions. Chad says, where do you see TNX going over the next 6 months? Well, that really depends on the Fed, as we know. So let's go ahead and bring up at least a weekly chart. I think the top we'll get to is 4%. That would probably be the top of it. By that time, I think the stress to the financial market in terms of having such a debt load and increased in interest rates, the Fed will walk it back more than likely. A Fed put will probably be in place. That's what it's called. But I think 4% is your high watermark, at least for 2022. In terms of 2023, I mean, if they continue this tightening policy, 5.22, which would be 5.2%. And again, guys, that is not very far fetched. We were there just in 2006. I know that's a different time from everybody, but again, mortgages were not always sub 3%. I mean, if you guys took advantage of that, great. If you didn't, markets do move. Maybe housing comes a little cheaper or demand comes down as interest rates go higher. But again, 4% being my big level on TNX, that'll be my alert as more than likely a top, if not a short-term top, at least for 2022. Morning, Carlos. Thoughts on Apple calls this week? Let's go take a look at it. That's from John. Let's go and fix this up. We're going to keep it short today, short term, at least for the hourly. Not many gaps, not a lot of edge here. Your support is right around 149. If you break above 151, you could possibly play the 152.50s. Not the sexiest chart in the world, but again, that 149.63 is holding. No gaps there. You have a 100-day moving average on the daily there at 152.02. That would be a nice target if you're trying to go short term. I would want to break that first and then target 155. I think that's probably the better trade. I want to run in right now and just start buying call options at the open either. Will the Fed funds rate peak? Tough question to answer. I mean, that's really dependent on the Fed. Are they going to over tighten us into oblivion, or are they just bluffing and seeing exactly where the markets go and the market's pricing in for an absolute rate Armageddon? Let's just call it. Again, I have the 10-year rate, at least in the short term, for 2022 to 4%, and then we'll roll over. That kind of works with the seasonality and equity mindset currently. But again, 4%, at least on the 10-year, seems to be that short-term top for me. If you're taking a look at least until 2023, with the continuation of tightening, 5.53 seems about right. Imagine that, 5.53 in a 10-year. You're talking about mortgages being around 7 to 8%. At that point. So talk about destroying demand. You got it. The Fed is doing exactly what it's out to do. What do you think will be the bottom of the S&P 500 year-end level? Mine will be here. Let's go to the 3-week. It's right there, 35.86. This has moved up from 3,500. Again, that would probably be the absolute low. That's exactly probably where, if you wanted to buy, you probably hate yourself for buying. And that's pretty much the level you're looking for. Because if you break that, then you're talking about going to 29.16, which is something that Goldman Sachs and Bank of America have talked about. But again, I think they had like a little poem regarding that. 3,800, 3,500, you're nibbling. 3,300, you're eating more. And 3,000, you're gorging. That's what they're saying. I'll say 35.86 to start adding to some exposure to the portfolio. But really, the only thing here is you're looking at, again, do you want to catch a falling knife either? So you don't want to go in as well, all in either, especially if you need the money within the next 24 months. If you're buying stocks here, it's because you don't need the money in the next 24 to 36 months anyways. The rule of thumb, it should be 5 years. But again, it depends on what you're looking for. If you're looking for a trade, again, you got to look at the opposite side of the bed. Everyone looking at stocks being to the point that we may just go to 3,000. Again, that might be opportunity on this excessive fear as we are below 30 on SPY on an RSI. which we haven't had really since February 22 or end of January this year. And what happened then? We had the Russian invasion of Ukraine. So again, that is the last time that we had that much fear in the market. That could provide opportunity for those who have a little bit of a long-term view on equities. In terms of trading, a tough tape, as we know. Let's see. VIX is going through the roof. Should we expect stocks to get hammered once the market opens? Right now, it is back and forth. Very tough to call it since the BOE is now intervening in the actual currency, the British pound. So again, you're keeping an eye on the dollar and you're keeping an eye on yields. You could see, let's go ahead and bring this up, TNX. You can see the 10-year yield is starting to bounce back. I say that we do fill that gap, 37.03. May give some reprieve to the market, but I don't expect a ton of movement today at all. Tomorrow we do have Powell speaking, so maybe that'll give us some kind of a move. But again, TNX, DXY is really all we're looking for. The VIX has been kind of slow running the equity market as well. Volatility index is not that volatile as it should be. I mean, we should be around a 34 VIX as we have this RSI. But again, you could see possibly some call buying that'll bring down the VIX reading itself. So I think the dollar and the yields are probably the best two proxies to watch where the Nasdaq goes moving forward. How exactly does raising rates bring down inflation in layman's terms, please? So if we raise rates, what we're trying to do is remove excess money from the system. If people have less money to spend, they're less likely to buy things or to do things. And again, with dwindling demand and supply being constant, prices need to come down in order to attract demand. So again, kind of increasing scarcity of a currency or increasing scarcity of money will make people less likely to spend and more to hold their money. So again, right now the Fed, what they're doing raising rates is rewarding saving through higher interest rates in savings accounts, CDs, 10-year on bonds, and kind of removing the idea or the kind of the inclination to want to spend. Again, we're doing this to reduce inflation. Inflation comes in from demand outstripping supply. We just don't have enough supply to give to everybody in terms of, travel now or cars or what have you. So again, raising rates, making money less available is the way to kill inflation. Recession is the poison pill to kill inflation. We've had it through the 80s and the 70s. That was really the best way to kill it. But then, of course, then you have the issue of getting out of recession, and then you do inflationary things like tax cuts and stimulus and lowering rates. So again, it's always been that kind of even keel where demand and supply, it's always facing each other. So again, what we're trying to do in the market, or the market is doing now, is drain speculation, drain liquidity, drain demand by increasing rates. Again, more likely, you're probably not going to buy a house today at a 6.2% rate. So again, that lowers pending home sales, that lowers the bidding wars, and in turn lowers prices. So what do we start buying with? When do we start buying with real capital? Well, when it comes to buying with real capital, that really depends on you. What is the list that you're looking for? What are you looking to do? What's your risk tolerance? What's your outlook? Do you need the money 2 years, 3 years, 4 years, or 5 years? Again, it's not as simple as just hitting that buy button. You got to have a plan of what you're trying to do. This is a point, an inflection point, just like in 2020 in March, where everyone was like, do I buy stocks here? Do I not buy stocks here? What do we expect moving forward? It's okay just to wait. At the end of the day, you don't have to just start throwing in capital just because an RSI is oversold. Have your plan, have your names of stocks, have your prices that you want to get in, and then also have your price of when to get out or when you're going to hold long term. Have a reason to buy. Don't just buy just because you want to catch a bottom and look cool. That doesn't get anywhere. The most important thing is have your plan and know what you want to do moving forward 3, 4, 5 years from now. Have your list, have your targets, and invest in something that you actually use that in the beginning. That's always a good thing. Again, if you are a big lover of Starbucks, that'd be a great start for an example because you support the brand. And again, it keeps you invested even through the rough periods. This volatility, guys, has been happening forever. I mean, this is just the admission price to be in the market. Or you can just make things easy. Just buy an S&P fund over time and you'll be fine. Buy it every week, every 2 weeks, every month. That's pretty much the easiest autopilot way to do things. And you don't have to worry about catching a bottom or should I get in or not because you're fully invested over time. Your future self and your children will thank you. Have a great rest of your morning. I will catch you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. And we'll see you then. Go Cowboys. We play the Giants today, Monday Night Football. So let's see what my boys do. Have a great rest of your day, guys. Cheers.